Welcome back to a brand new weekly market outlook on gold, brought to you by Fundy Frontier and myself, Ryan Cruz. You know who I am by now. So what we'll be doing is be going over the weekly, daily, 4-hour, hourly, half an hour, 15-minute, looking at multi-time frame analysis, top-down analysis of each time frame, where we can get some potential market moves for next week and predictions, looking at key areas and some potential key trades. Now, we will also be looking over USD news for this particular pair, looking at what may be potentially affecting it and certain times to look out for, certain times to avoid. So let's jump straight into it. So already looking at the previous weekly candle that we just printed, we did say last week we had closed above our most recent resistance, our previous resistance on the 2 weeks ago candle now, and we said if we do now respect the previous low of the previous candle and break the previous high, then I would expect a continuation drive going into all-time new highs. So a lovely market shift, lovely market structure there. We got the really nice bottom wick that we wanted to see to continue up on bullish. Now, looking at the previous week now, of course, yes, we did get the push up. We have slightly finished with a bit less volume than the previous week, as you can see, evident from the volume and evident from the smaller body. So again, at gold all-time new highs, it can get very volatile. And as we always know, predictions for previous data to go off where there's key levels, there's no key levels because there's no data because we're at all-time new highs. Therefore, we have to use $5 increments on the right-hand side of the price, going up in $5 if we are going to continue up on bullish. I'm sure I'll say that another 3 times throughout this video. But what's the prediction for this week? Well, again, at all-time new highs, if we can respect the previous low, again with a nice wick down, respecting the previous low, and then break the previous high, I will expect gold to continue up on bullish in this huge bullish run that we have had over many months / years now. So yeah, with that important closure coming into all-time new highs, respecting the previous low first, then break the previous high is what I would like to see going into all-time new highs. However, if we do start very little to no bottom wick on the candle, you won't believe this, but you need to stay away from no wick. If we do start with very little no bottom wick and then just break the previous wick pretty early on in the candle, normally we're looking at a half an hour time frame, we'd start to think, right, if it does break the previous high so early on in the candle, we are going to expect a pullback. So if that is the case and we do run up with no bottom wick, like so, I would expect some volume to keep continuing to drive price. However, I would expect then a rejection, having a potential fake out if we do close back in the range here below our most recent resistance, and have a bearish week. But there's 2 scenarios. You can't always just predict where price is going to go. You have to be active and fluid in the markets. What's going to happen first? And that's where we use the lower time frames as well to see where we can get some further price predictions. So what I'm going to do now is go over to the daily and see what we have here. So yeah, pretty nice again. As you can see on the daily, we did have this was our all-time new highs previously at this area here, around 2790 area. You know, we closed above there with this previous candle with no bottom wick, which I do like. Obviously very high volume, no bottom wick, just straight drive and closed above. Then obviously on the Friday, we had a small bottom wick, respecting it very ever so, and then breaking a previous high to continue up until them gold all-time new highs. Now, yes, we did have a break above our previous resistance, which is nice to see. We also have this most recent support form now, which is really nice and clean, because below this area, we do have nice clean candles coming down to 2701329. So we do get a closure below this area here on the daily, below the 2742 area. Then I would expect price to come down to at least tap 2701329. Potential for a steeper pullback tapping into this previous resistance as well over here in this area. I'll mark that out for you. It's a very key area. We've said it multiple times on previous weekly analysis. So well done if you are tuning in. But yeah, we've got nice clean candles, potential retest to this area if we get the candle closure below our most recent support there. Now, being a bit more scrutinizing it in a bit closer now. Yes, this is our new range. We have closed above, but we have now just printed a very, very weak bullish candle, bullish exhaustion wick. What I would actually really prefer to see if we are going to have that bullish week, I would like to see now price to open up, maybe a tiny top wick, break the previous lows, because we have created high highs and high lows now, so I would like to see price continue bullish. But we start opening the daily candle, break the previous lows, enticing sellers into the market because it looks like a rejection, right? Small body, big wick. Then, if we do then flip bullish, after creating that bottom wick, grabbing liquidity, and then we flip bullish, that's where I'll be looking for buys, because I will expect price to continue up on bullish and breaking the previous high, making a really nice MC play. So it looks something like so. Like so. That would be a lovely, lovely entry, lovely buy opportunity. One of my favourite moves, and that's just off the daily there. So let me just mark out these areas again. So if we do get that closure above, and we do get that play, we continue up on bullish. First initial targets, of course, if we do have the bottom wick first, initial targets I'm going to be going for 2,820, so the next $5 increment. Then 2,825, then 2,830, then 2,835. You get the idea, right? Every time we go up in $5 on the price, we'll be looking to secure more partials and target areas. If we do continue up on the bearish week, though, if we do continue closing below this area, like we said with the clean candles for initial targets at 2,701, then more clean candles coming down to 2,663, 768, and then more targets coming down towards 2,634, 663. But I would prefer the bullish move there. Again, really nice structure on the 4 hour. So I'll leave the $5 increments in for our target areas, so we know where we want target areas now on the buys. Just off the 4 hour, we've got a new resistance formed at 2,708 for 742. So closure above there. Then I'll look for the initial wick fill, and then I'll start looking at the $5 increment targets. But as you can see from the 4 hour, we've created really nice support, creating this new range, which is really clean. So if we do get that closure below, look, really nice. I'll leave this daily TP in first. We've got really nice clean candles. First TP would be at the previous resistance here at 2,782, 224. Then the daily target area. Then we're going to be targeting this no bottom wick at 2,760, 305. And then very final targets going on 2,751, 874. And we just slightly adjust that rest of them clean candles there. So it's really nice if you get that bearish week. And it makes so much sense still, because if you do continue up on bearish, then you've got the previous support at 2,721 flat. But this might be later on in the week where we start getting candle closures below these key areas. And then coming over maybe to the Wednesday, Thursday, Friday, if you start getting closures below these key areas, then you still got the clean candles to the left, and so on. Right, they're coming down to the hourly / the half an hour / the 15-minute, making sure they will look really nice and tidy, which they do, which is really clean. So based off the 15-minute, yes, this is our most recent support here. So I will be looking to just measure out the rest of these range for the rest of the clean candles. 40 pips, so that's actually a really nice area for support. I was going to say, if this area wasn't, if it was less than, 10, 20, 15 pips, then I'll be looking for the next support as an area. So if we get that candle closure below for sales, let me just mark out this area more cleanly. There we are. Then yeah, Initial targets will be at 2791,412. We've run out of these clean candles coming down to the bottom of the support. TP2 will be the rest of this wick fill, as you can see to the left. And then TP3 coming down to the bottom of this support at 2783,841. And so on. We've got the wick fill after that, which is really nice. A bit of a choppy area then. So I would call this range here. Oh, bear with me. We'll call this range here a bit of a no trade range. But then again, later in the week, we do get that candle closure below 2777,262. Then we've got more clean candles. Again, targets at 2773,921. You get the idea, right? And then continuing on. As soon as you get support, wait for price to close below it. As long as, you know, you're following all your other rules. If we haven't moved too far in one direction, etc., etc. And the candle closure wicks are nice and the bodies are nice. You know the drill by now. If you've done your studies. So yeah, more clean candles after that and it's perfect. So yeah, really, really nice sell side opportunities there. We've got lots of key areas. Take a screenshot, take down the prices, whatever you need to do. How about buy side? Buy side looking really clean on the 15-minute as well, which I really, really like. Let's just get that drawn out nicer. So yeah, we formed a new resistance at 2708,934 area. A candle closure above there. Look how clean we've got. Clean candles. I'm going to go initial targets at 2806,346 initially. Based on the fact we've got this previous support that we could tap into first. If we do keep on running up, but then again, look, it's perfect. Coming up to 2813,760. Look at these lovely clean candles. Clean traffic that we keep moving up. TP3 is going to be the wick fills. 2718,206, and then you're in the free range. There's no previous data from then on because these are the all-time new highs, and that is where I've marked out my $5 increments for you guys. So that's what I'll be looking for during the week. So please make sure you trade safe. Don't risk more than 2% per trade. Stick within the rules. Stick within the parameters. Good risk management. Please don't forget to leave. If you did enjoy the video and you like this free educational content, keep them coming. Leave a like. Make sure you subscribe to the channel. Follow Funding Frontier on Instagram. That is at Funding Frontier. And don't forget to follow myself at Ryan Cruz FX on Instagram as well for all the latest updates, trades, executions, everything. We have it all. So hope you enjoyed the video, guys, and I'll see you on the next one.